Okay, so yes, I think the last time we did November 2016, right? So we have solved May 2016 and November 2016, right?
Yes, bro.
Hello.
Yes.
So I think today May 2017 was a cash flow, right?
Yes, please.
So today we'll skip it and go to November 2017. We'll deal with cash flow separately. So let's go to November 2017. So let's go to November 2017. Open your questions up. Yes. So November 2017, question 3.
Yes, sir.
Yes, someone should read for us. Who is
All right.
reading?
Question number 3. So, required. We said prepare a schedule showing any correction required to the profits and other comprehensive income for the year. And then the B said redraft the statement of financial position as at 31st October 2017, taking the above into account. So, Okushe Limited, a listed
Okay.
textile manufacturing company, prepared the draft statement of financial position as at 31st October 2017. Now, on subsequent examination of the books and records, the finance director prepared a list of issues which she believes may require amendments to the draft statement presented. So, Okushe Limited, statement of financial position as at 31st October 2017.
Hold on there. So this is what we call redrafting. Redrafting simply means that the financial statement has been prepared to some extent. That is a draft version, an unsigned version of the statement. Then there may be one or two issues which may not have been factored into the financial statement. And so top management can identify top management in the finance department, maybe finance director also can identify all these issues and then ask you to rectify them by putting their effects into the financial statement so that we can have the new financial statement. So when it happens like that, it rather becomes fairly easier because after all, the statement has been prepared for you already. So you can see clearly that they've given you a statement of financial position. Now, someone will ask that once they've given me statement of financial position, where is the statement of profit or loss? Where is the statement of profit or loss? We don't need a statement of profit or loss because now why do we do the statement of profit or loss? Someone should tell me the reason. What is the reason why we prepare statement of profit or loss? The very first statement we prepare. Why have we been preparing that? What is the goal?
To know the profit of the year, the that year.
Yes, to know the profit for the year and then other comprehensive income. Is that clear?
Yes.
Now, this profit for the year and other comprehensive income, at the end of the day, they find their way into the statement of financial position. Do you agree?
Yes, sir.
Yes.
The rest of you who have muted yourselves, please unmute yourself and participate. You know me, unmute yourselves and participate. Unmute yourselves and participate. So what we are saying is that the results of profit or loss and other comprehensive income will always find their way into the statement of financial position. How do they find their way into the statement of financial position? The profit for the year will affect retained earnings, right?
Yes.
Yes. Yes.
And then the other comprehensive income for the year will also affect the reserves, true or false?
True.
Yes.
The reserves together is what we call other components of equity. So when you go under equity, you should see the effect of the profit and other comprehensive income. So you see, if you look under equity here in the statement, you will see clearly share capital 580,000, retained earnings. You will see the balance as at November 1st, that's the beginning of the year, and then the profit for the particular year. Can you see the profit for the particular year?
Yes,
Yes.
sir.
95,000.
Then dividend declared there. Then you also see other components of equity. You see the balance as at the beginning of the year, 128,000. And you see other comprehensive income for the year. Can you also see other comprehensive income for the year?
Yes, sir.
Yeah.
Also, this is why. Put back down.
Please, can you?
So this is the reason. This is the reason why you may not need the statement of profit or loss, because whatever figure you are looking for in the statement of profit or loss, it has been provided in the statement of financial position. And then the question is saying that we should prepare any corrections, a schedule showing any corrections that is required to the profit or loss and other comprehensive income. So I'll first come here, the first page, then I'll title it Okushe Limited. Okushe Limited. Statement showing corrections to profit and other comprehensive income. Profit and other comprehensive income for the year ended. So the year end is what?
31st October 2017.
2017.
Yes, sir.
So we ask ourselves, what are the two things we are adjusting? We are adjusting the profit for the year. So I can put profit for the year here. Profit for the year. I can put it at one side. Then I also put the other comprehensive income to at the other side. So I can do this so that, yes, I'll read all items and then use them to adjust it. So I leave this down. And then they are also asking me to prepare my statement of financial position. So let's assume the first page. So everybody do that. Your first page, you can do this and then leave when this board starts misbehaving, then when the network is bad. Please write this down. The first page, title it and write this. I'll close the board and open it again. The first page, title it Okushe Limited. Statement showing corrections to profit for the year ended 31st October 2017. Put profit for the year at one side and total comprehensive income at the other side. Quickly do that. Quickly do that. Yes, so we can go to your next page too. You can go to the next page and then also start the statement of financial position. So I will do the workings first because of the nature of my board. I'll go ahead and do my workings first. I'll go ahead and do all my workings first. Because of the nature of my board, I will do my workings first. But you should make sure that you leave the first page for the corrections and then in that order. System is slowing down too much. The network is not so favorable today. Okay, so let's go. Let's go. So let us read the footnotes. Let's read the footnotes and then see how to adjust them. Note one. Note one, my brother, read for us.
All right.
My brother, read for us.
So the following notes are relevant. Property, plant, and equipment are carried after charging depreciation for the year. Now, on 31st October 2017, a piece of property carried at 130 million Ghana cedis was valued to 110 million. Now, this revaluation has not been accounted for. The revaluation reserve, that is included with other components of equity, had a balance of 12 million Ghana cedi due to previous revaluations of this property.
So that is note one, PP. They said it is carried after charging depreciation for the year. And on 31st October 2017, that's the end of the year, a piece of property carried at 130 million. So first of all, what the revaluation? So revaluation of PPE. Yeah, they said a piece of equipment with a carrying value of 130 million. So carrying amount of the equipment 130,000. It was revalued to what? 110. So if we compare it to the revaluation of 110,000, what is happening? What is happening there?
Valuation loss.
So that's we call it an impairment, yeah? A revaluation loss is an impairment. So an impairment of 20,000. So we have an impairment of 20,000. Please, the network is not so favorable today. So those of you who have been taking the screenshot, immediately I draw your attention, you have to be proactive. Let us help ourselves. The network is very bad at my site here. So let's help ourselves so that we get value. The moment I'm done and I ask you to take a screenshot, be smart so that we don't, lose sight of valuable information. Okay. So that is an impairment. But then they are telling you that this revaluation has not been accounted for. But the revaluation reserve, which is within other components of equity, had a balance of 12 million due to previous revaluations of this product. Now, we have an item that has been revalued previously and it has resulted in a gain. Subsequently, if we revalue again and it gives you an impairment, what must we do?
You charge the impairment against the revaluation gain.
Revaluation surplus.
As equal to the amount.
Very good. So we'll net them off. We'll say revaluation gain versus impairment. We have to net them off. So we say revaluation gain versus impairment. So they are telling you that previously there is a gain of what? 12 million. So what I'll first do is that I will take this loss of 20 million and I'll use the loss of 20 million, 12 million to cancel the previous gain. Is that clear?
Yes. Yes.
Okay, so I'll put the revaluation gain brought forward, which they are telling you is 12,000. Now I'll use part of this 12,000 to cancel it, right?
Yes.
So let me say cancelled by impairment. So if I use 12,000 from that impairment to cancel it, it means that there is no revaluation gain again, right?
Yes.
Then the excess impairment. So the excess impairment. So the excess impairment will go to P&L. So excess means give me the total impairment of, what was the total impairment?
20,000.
20,000 to 8,000.
So we have total impairment of 20,000. And I've used 12,000 to cancel the gain. Are you getting it?
Yes.
Yes.
So let me put it here. Used to cancel previous revaluation gain. So use to cancel previous revaluation gain in working 2. That's 12,000. So the 12,000 I used to cancel, I'll be left with excess impairment of what?
8,000.
8,000, which I'll send to what? P&L. Is that clear?
POL.
Yes, sir.
All right. Yes. Now those taking the screenshot, help us with this so that we don't lose. Yes. Those taking the screenshot. Who is taking the screenshot for us today? Oh, nobody can just volunteer. Nobody can just volunteer to do what we have to do.
Okay, I've done it.
This is the problem with students. You know we have a problem. We are managing it. Now somebody should volunteer to then nobody cares, and then we are there. Or I should move on.
Because we have done it.
Please, iPhone and Samsung people, please take it for us.
Okay, so let's go to the next footnote.
All right.
So continue paragraph. There is something in the paragraph. Continue.
A sale agreement was entered into during October 2017. Now to sell some of the plant. And the plant sold had a current value of 45 million Ghana cedi at the date of sale. It was sold for an agreed price of 39 million.
So let's hold on.
Has yet been received.
So this is profit or loss on disposal. We disposed an asset. So let's calculate the profit or loss on disposal. Yes. They said the plant had a carrying amount of 45 million. So we'll compare the carrying amount, 45,000. We'll compare it to the sale proceeds. And they said it was sold for an agreed price of what? 39, right?
39 million.
So the sale proceeds was 39,000. What is this? This is a loss.
It's a loss
A
on
loss
this.
on disposal. Hey, the one shouting impairment, this is strange. Anytime you see a loss, you call it impairment. The thing has been sold. This is a physical money. You need to be careful. So a loss on disposal of what? 6,000. And they say no loss has been received in respect of this sale. But the 30-day credit period has been agreed with the purchaser. No entry has been made for this transaction. So since it was on credit, the sale process was on credit. So since it's on credit, it will affect our receivables, right?
Yes, sir.
So go to receivables. So go to receivables, section 5. Receivables. You give me the original receivables from the statement.
The receivable brought forward 130,000.
From here. Can you all
Yes.
see the receivables
Yes.
here?
Yes, 130,000.
130,000. So we have receivables brought forward 130,000. Receivables brought forward 130,000. There we have what? Yes, from the plant sales.
Sale process.
From plant sales in working for, we got a further what? 39,000, right?
Yes, sir.
I can leave it. The same way, now the revaluation and the disposal will affect my PPE, right?
Yes, sir.
Yeah.
The revaluation and the disposal will affect my PPE. So let me work in 6. Yes, PPE. So give me the initial PPE value. Give me the initial PPE value.
It's 1,020,000 Ghana cedi.
The balance brought forward 1
1,020,000.
Yes. So what happened? There have been a revaluation, right? Right.
Yes, sir.
There has been a
Yeah.
revaluation which was an impairment.
Yes, sir.
20,000.
So the impairment, yes, that was 20,000. And then we've also disclosed some costs. But how we
Yes.
disclose of what the carrying around
45,000.
45,000. We should also reduce it. We disclose it of 45,000. Our impairment was in working amount.
Impairment was working
Was
amount.
working on number 1.
Working number 1, So we had an impairment in working number 1. 20,000. We should also affect it. Yes. Whoever is taking the screenshot, let's go here. Where did you take it up to? Up to
3. Up to 3.
did you see the end of 3? Okay, so you take this. Take 3 and 4 for us. Do that quickly. Take 3 and 4 for us.
Okay, done.
Then take 5 and 6 too. Are you okay?
Yes, sir.
Let's move on. Yeah, so my brother, go on with the next week.
Yes, sir. So note 2. Now the equity investment had a fair value of 380 million at 31st October 2017, which has not yet been incorporated into the financial statement.
Mhm.
Now Okushe has taken a decision to take all fair value gains and losses on equity investment to other comprehensive income, as permitted by IFRS 9, a financial instrument.
So IFRS 9 financial instrument. The person has an investment and he has made an election that for such investment, all fair gains and losses will be recognized in other comprehensive income. It means this is an available for sale instrument, true or false.
True.
If it is held for trading, it will be measured at fair value through profit or loss. But available for sale will be measured at fair value through OCI. So this is an available for sale investment. So let's go and check. It has not been fair value. Let's go to the statement and check the carry amount. Yes. So equity investment. What's the carry amount? Yes. The carry amount is what?
360,000.
2,000.
360,000. Now they are telling you that the fair value at the year end 31st October 2017. The question said the first value has become what? Yes, 300 and what?
80,000.
380,000. So this is a fair value gain, which will chart where? OCI, exactly.
Yeah.
Sorry.
So a fair value gain of 20,000, which will chart to OCI. Done. Yes, the next footnote. The 5% debenture was issued on 1st November 2016 for cash proceeds of 150 million and was correctly recorded. The redemption terms of this debenture are such that the effective rate of interest to maturity was 6.5%. The only entry made in respect of this debenture was the payment of 7.5 million due on that date. So you see, they have issued a debenture. When they issue the debenture, they have collected the cash proceeds. But then, you know that from IFRS 9, debenture is a long-term liability. It must be
Yes.
measured at amortized cost, true or false.
Yes.
That is the difference between effective interest and nominal interest. However, they are telling you that the person has only recorded the cash of 7.5 million. The 7.5 million is you see, because it was a 5% debenture, they have calculated 5% of the 150 million. So calculate 5% of 150,000 and see. You will see that it will give you that 7.5. So it means they have only recorded the nominal interest. They haven't recorded the effective interest. So you will do what the standard says. The standard says that we should do what? what does standard access to do? It says we should measure all held to maturity instruments at what? Amortized cost. So let me pause for a while. My process has started misbehaving. Okay, so let's continue. So working number 8. Yes, it says the debenture should be measured at amortized cost. So amortized cost means we should carry it at the difference between effective interest and nominal interest. And so this is what we do. 5% debenture. We say 5% debenture. If that was issued when?
November 2016.
In November.
So the year, the opening balance, plus the effective interest. Effective interest at what? 6.5%. Then you take out the nominal cash payment, and then you get the closing balance. Yes. So from the statement, they said it was issued on 1st November 2016. So they've used it for only 1 year. So from the statement, the 5% debenture balance was 150,000, right?
Yes, sir.
So to 31st October 2017, 150,000. The effective interest is 6.5%. So calculate 6.5% for me. Calculate 6.5% of 150,000 for me.
9,750.
So the effective interest is 9,750. But then the nominal interest is what? The 5%. Calculate the 5%.
7,500.
7,500. So the nominal cash payment is the 7,500 they paid. So 7,500. When we take that out, what will be the balance? What will be the balance?
2250.
152.
2250.
2250.
Are we not supposed to add the
2250.
Somebody is saying something. He said, are we not supposed to add what? Please talk.
some
Let
It
us
should
hear.
be 2250.
No, you add the opening balance to it. Is the opening balance plus the effective interest
152,250. That's it.
minus the nominal balance? Yes. So 152,250. So this will bring you an extra finance. So the extra finance cost is the difference between the effective interest. Yes, what did the effective interest give us?
6.1.
The effective interest is 9,750. And then the nominal interest.
7.5.
The nominal interest is the cash payment, which is what?
7,500.
When you net it off, what do you get?
2250.
2250. Let's go up there. Let's finish it. We'll come back. Yes, the next footnote. It says Okushe Limited offers a 12-month warranty on all goods sold to its retailers. A provision is maintained for the expected cost of honoring this warranty. This has not been updated as 31st October 2017. And Okushe sold 40,000 units of the relevant product during the year, all of which qualify for the warranty. it expects that 10% will need major repairs at an average cost of 500. 3% will need major repairs at a cost of what? 10,000 each. And all costs are expected to be incurred within 12 months. Now, this is IAS 37 provisions. It says that such items, like warranty provisions, they are small items and they have to be measured using expected values, true or false.
True expected value.
So we will calculate the warranty provision for the year end. The warranty provision at the year end of 31st October 2017. First, know what the account will be. So in that, we can take the detail. We can multiply the probability. Expected value is probability multiplied by cash flow. So the probability times the cash flow, then we get the expected value. The expected value. Now, it says that it expects 10% to need minor repairs. So for minor repairs, So for minor repairs, 10% of the 40,000. Remember, I sold 40,000 units. So 10% of the 40,000 units. And then that will attract an average cost of what? 500. So multiplied by 500. So calculate 10% of 40,000. What is 10% of 40,000?
4,000.
4,000.
Multiply by 500. That will give you what?
2 million.
So since we are working in thousands, I'll take 1,000 off and then write
2,000.
This is my network. Let's see also 2,000. Then our major repairs. Yes, major repairs.
It's
We said
3%.
what percentage will require major repairs?
3%.
3%. So 3% of the 40,000, that's the probability. And then the cash flow associated with it is what? 10,000. So multiply that for us. 3% of the 40,000 will give you 1,200 times the 10,000. That will give you
120,000.
So 12,000.
That give you 12 million.
Yes.
So I'll take the 3 zeros out and then enter the 12,000. So the total warranty provision at the year end will sum up to what?
14,000.
14,000. So my total warranty provision here should sum up to 14,000. So in the warranty provision account, how will I treat this? If I have the final provision, how do you measure provision subsequently? It says we should compare the opening balance, right, to the closing balance. What was the opening balance in the statement which was unadjusted? Look at the current liabilities. What was the provision opening balance?
12,000.
12,000.
The opening balance is 12,000. Compare it to the closing balance. If we compare the opening balance to the closing balance of 14,000, there is an increase in provision. Now, an increase in provision is what? An expense, right?
Yes. To
Increase
decrease.
in provision is an expense which we have to charge to a P&L, right?
Yes.
1,000. So that is increase in provision shall be charged as an expense to P&L. Have we finished with the footnotes?
Yes.
Yes,
Yeah.
we have. So once we are finished with the footnotes, we can close existing accounts and then we come and balance our statement. So let's go to the top and see if there is any existing account we need to close. Let's go from the top and see if there is any existing account. Let's close it, and then I will take full screenshots and work. Yes, this has been closed.
Receivables.
So let's go to receivables and then close that account. Receivables, since there is nothing again, we can close that account at a total of what?
169,000. Then PP.
So give us what?
169,000.
Network is very, very slow. 169.
Yes, sir.
Network is slow. So let's what about the PPE?
55,000.
955.
Yes, sir.
I'm slow on network, so let's manage it gradually. We'll get there. 955. That's 955,000. Is there any account else? I think there is no account again.
Yes.
So the one taking the screenshot, I'm now going to allow you to take full screenshot for us so that we will use that to prepare our statements. So with all due respect, take this for us. Take this for us as your first screenshot. So you can ignore the previous one. Take this one for us.
Sir, please, the question, can you start from the beginning?
The question should what?
From the beginning, the question. Yes.
Yes. From the footnotes. I can about the footnotes. Yes, who is taking the screenshot for us? Are you okay?
Yes, sir.
Can I move up?
Yes, please.
Let me position it there. Yeah, so take working 4 and 5. Take working 4 and 5 for us. When you are done, notify us.
Done.
Take working 6 and 7. Are you done?
Yes, please.
Take working 8 and 9. Are you done?
Yes, please.
Then working 10. Take working 10. Are you done?
Yes.
Okay, so let's go and prepare the statements. So the statement will come here, and as usual, I will say, yes, Okusho Limited. So Okusho Limited statement showing corrections to profit and other comprehensive income for the year ended. Please, what was the year end?
31st October 2017.
31st October 2017. I'll put profit for the year at one side. Then I'll put the other comprehensive income. I'll put the other comprehensive income too at one side. This is my network. Very bad. Okay, so give me their opening balances from the statement. From the statement, give me the uncorrected balances. What was the uncorrected balance for the profit for the year? Profit for the year. What was the uncorrected balance? Under equity.
95,000.
So profit for the year uncorrected balance is 95,000. What about other comprehensive income? Also 35,000, right?
Yeah.
Yeah.
Now, what did we get in our working one? Working one, what did we do? We had an impairment, right?
Yes.
And then the impairment, yes, the impairment, how did we share the impairment? We used 12,000 to cancel the previous
Value.
in OCI, right?
Yes.
So the impairment we got in working two, we canceled 12,000 from OCI. Do you remember?
Yes.
Yes.
And then the extra 8,002 went to P&L. It will also reduce the P&L. Is that clear?
Yes. Okay.
Yes.
Then the next thing is we disposed a plant and we got what? A loss on disposal. Do you remember?
Yes, sir.
So loss on disposal,
6,000.
that was in working three. 6,000. Will it affect profit for the year or other comprehensive income? It will affect profit alone, right?
Profit for the year.
So 6,000 is a loss. It will reduce it. Then what did we do? We did available for sale instrument and we got what? A fair value gain. Do you remember?
Of 20,000.
Fair value gain. Which we are charging to OCI. We got that also in working four. And that gave us what?
20,000.
20,000 gain to OCI. Then
The finance first.
we had an extra finance cost, right?
Yes, sir.
So the excess finance cost when the board is freezing, let's be patient. Gradually, we'll get there. Yes, extra finance cost. So what did we get in the extra finance cost?
225.
0.
2250.
50.
So that's finance cost to reduce profit. Then what did we get next? What did we do next? A warranty provision, right?
Increase in warranty. Yes.
Yes, increase in provision.
Yeah.
That's working about what?
11 or 10.
10.
10.
2,000. So it will also reduce
Profit.
the profit for the year. Is that the last working?
Yes,
If that
sir.
is the last, then we'll close it. So when we close it, what will this give us? Please calculate for us. This is 40. 35 minus 12, that is what? 23 plus is 43. So this is 43,000.
$76,750.
76,750.
Confirmed. Okay.
That is 76,750.
The profit for the year.
76, 750. This is my network. My network today is not reliable at all. 76, 750. What about the other comprehensive income?
43,000.
$43,000. $43,000. Okay. So my brother, you need to take this for us so that we can.
Okay.
My brother, please take this for us so that we can prepare the statement of financial position. Take this for us. Are you okay?
Yes, please.
Have you taken it?
Yes, sir.
Then let's go to the statement of financial position. So you then redraft your statement of financial position. So Opushe Limited. Now statement of financial position as at 31st October 2017. Yeah, so follow their statement. Follow their statement and mention the items for me one after the other. Then the ones we have worked. Now, please, under exams condition, whatever item you treat from the footnotes, make an asterisk on the statement so that when you get there, you will know that that particular item you have adjusted it. Is that clear?
Okay.
Yes, sir.
If you don't do that, you may forget. You may see a figure. Maybe you have adjusted the figure, but you may forget and pick the old figure again. Is that clear?
Yes,
Yes,
sir.
sir.
So when you are writing, make sure that anything you have worked on, you put asterisk or something beside it to tell you. So let's see. Yes, non-current assets. Non-current assets. So PPE. When you did your PPE workings, what did you get? 955, eh?
Yes, sir.
Okay.
That was working number what?
Working number 6.
Working 6. And we got 955.
Yes, sir.
Then we have what? Intangible assets. Did we do anything on the intangible assets?
No,
No.
sir.
So we just repeat the figure. What figure is there?
100,000.
100,000. Then equity investments. We did a working on it, available for sale. I think it was 380 or something.
Now 380. Yes.
Working about what?
Working about
7.
380,000. Then let's go to current asset. Now, when you are working between every category, at least leave 3 lines to make your work very clear. So between non-current assets and current assets, at least leave some 3 lines to make your work very, or 2 lines, at least 2. At least some 2 lines to make your work very clear. Yes, current assets. Inventory. Did we do any adjustment to inventory?
no, sir.
Did we do any adjustment to inventory?
No, please.
Hey, the rest, I'm only hearing two people responding. Should I do my roll call? Inventory. What do we have?
No,
65.
no,
Five.
same, for 65,000.
What about receivables?
Yes,
We did a
we did the adjustment.
working about what?
5.
And the receivables became what?
169,000.
169,000, right?
Yes, sir.
Then cash and bank. Did you do any adjustment on cash and bank?
No. Credit.
So what is it? The same
30,000.
30,000.
So this will give me my total assets. Let's go to equity. Yes, equity. What is the share capital?
370, 580,000.
Share capital is 580,000.
Yes.
Now the retained earnings and then other components will change because the profit and OCR has changed, right?
Yes, sir.
So retained earnings. Retained earnings and then what? Other components of equity. So all of them will be workings. We'll go and calculate that later. Let's go to non-current liabilities. What are the non-current liabilities there?
Finance lease obligation.
Finance lease obligation. Did we do any adjustments?
No, please.
$175.
Yes, finance lease, what do we get? 175.
Yes.
Yeah, so 175.
Then the debenture, I think we did something on the debenture.
Yeah, we did something else.
The closing balance became about 152, 250 or so.
152.
Yes, the debenture.
152,250. Reference number 8.
One five two
250.
yes. What else? Current liabilities.
Trade payable.
Current liabilities. Trade payables. Did we do any adjustment to payables?
No.
No.
Trade payables, that's what, 95,000.
Yes, sir.
Finance lease obligations.
Finance lease obligation.
35.
That is what 35,000.
Yes.
Provision for warranty. We're working on it.
Okay.
Yes, sir. Yes.
I think the final balance became 14,000 or so.
14.
Yes.
That's what working on what?
11.
Seconds number 10.
It's 11.
What did we have? 14,000. Right?
Yes,
Yes,
sir.
sir.
Corporation tax due. Yes, corporation tax.
25,000.
What was it? 20,000. Is it
25.
25,000? Then final dividend due.
30,000.
As what? 30,000. Okay. So let's go and work for the retained earnings and then the other components and then come and put it in them there. So that's working number 12, eh?
Yes. Okay.
So retained earnings. Retained earnings. So the retained earnings, yes, what was the opening balance of retained earnings there?
375,000.
So the unadjusted one was 375,000.
Yes, sir.
Now, for the rest of you, the retained earnings is here. You can see the unadjusted one is 375,000. And then we adjusted it. By adjusting it, we made a profit for the year of how much?
76,750.
Yeah.
So profit for the year,
767.
profit for the year, how much? 76.
750.
Then there was the final dividend.
Dividend paid.
The dividends was what? 30,000.
Yes.
So what will be the balance on that account?
421,750. 21,750.
750. Then let's go to the other components. Other components.
The
What
brought
was the
for
unadjusted balance?
was 128. 128,000.
128,000.
Yes, sir.
Then we made OCI for the year.
33,000.
Salina.
21.
OCI for the year, what did we get?
43.
43,000.
Yes.
Yes. What are we getting?
171,000.
So let's go back in the statement and put them there. 421,750 and 171,000. And let's see if we balance.
Mhm.
Let's go
Sir,
back to the
please,
statement.
what about the other income for the year? The 35,000. Other comprehensive
Yeah, that
income
was
for
the
the year.
That was the
other
only one.
income for the year, which was wrong, and then we adjusted it.
Mhm.
That's the profit for the year they got. The OCI revaluation for the year, which was wrong. And we took the correct balance of 128,000 and we've adjusted it. So we don't need that again. Are you getting it?
Yes, sir. Thank you.
Okay. So retain earnings, we work it in working off Edu. Yes, retain earnings in working to give us 421 what?
750.
421,750.
Yes, sir.
Was that a figure?
Yes, boss.
421,750.
Okay, so 421. Four, 2, 1,750. Then other components of equity, we got what? 171,000.
Yes, sir.
Yes, sir.
171,000.
171,000.
Okay, so let us sum them if we balance. In the exam, so you don't need to waste time on that, but I'm teaching you, so I need to make sure that you see all relevant. Please add them up for us and listen.
1.699 million.
Hey, this figure there is strange. We can you balance?
Yes.
Oh, it's balanced.
Yes, sir.
One what?
699,000. Yes.
The exam, so you can get some figure. Now, what power? You look like this figure is not nice at all. So it's not possible.
The pressure.
Yes,
699,000.
Okay, so my brother, I'm going up so that you take the statements. I'm going up so that you take the statement. We value the statement. So kindly start from here. Take this one. Take this one.
You're done.
Are you done?
Yes, sir.
Let me go to equity for you. Yes, take this one. Let me go after this so I take it well to the liabilities. So take everything. Are you okay?
Yes, sir.
Are you okay?
Yes, sir.
Okay, so my people, do we all understand what is going on there?
Please, look at the calculation of the retained earnings and the other one, the last one.
Okay, good. Yes, those who have muted yourself, are you following?
Yes, sir.
Yes, sir.
I don't want to put my roll call. Me, I won't allow you to speak. I will embarrass you. You see, when they saw that I'm coming to do the roll call, they are quickly unmuting themselves. Ajiti, Angela Nchuanchi. Where is Angela Nchuanchi? Is she asleep?
Hey, say I'm here.
Ben, Big Man, Silo, Emmanuel Fa. Enoch, Ernest, Esther and Nelly Hammond,
So we are here.
Rabna Dennis, Faustina, Tia Morrison, Georgette Ofori, Gifty, and the rest. Let me hear from you. Let me hear you.
Okay,
Zulia
sir.
has somewhere else.
We
Somewhere.
are here.
We are here.
Okay.
We are not sleeping.
Okay.
Yes.
If it is, then let me go to the last two workings so that you take them and then move on. Yeah, so please take this. The retainer is another component. Are you okay?
Yes, sir.
Okay. So we finished November 2017. Which other year is there? May 2018, eh? May 2018. Okay, so May 2018. Can we begin?
Yes, sir.
Can we begin with 2018?
Yes, sir.
Yes.
Okay. So question number 3, let's go quickly.
Question number 3.
But please, so far, if your understanding of single entity statements
Yes, sir.
Simple.
are
Very
you
well.
in how to prepare the statements?
Yes.
Now, in fact, in question 3, preparation of statements, that place and then the standards, that is where you normally fail the paper. Listen to me carefully. If you look at marking, when you make clear assessment of students' performance, check the chief examiner's comments on the question paper. If you look at the chief examiner, we can use this as an example. Let's look at the examiner's comments here. Now, examiner's general comments. The general performance of most of the candidates was, as usual, below average. It showed that most of the candidates were not prepared and ready for the examination. They showed lack of knowledge in accounting standards and double entry principles. Candidates with high understanding of the accounting standards scored high marks, especially in question 2 and 4. Hey, please, if your background is noisy, mute yourself. You don't have to do that. Please, let's be disciplined. If you know somebody is disturbing at your background, then you mute yourself. It says that candidates with high understanding of accounting standards scored high marks, especially in question 2 and 5B and C. The orderly and logical presentation of answers continued to be a challenge to most candidates. They say you have not been preparing your solutions well. If your handwriting is not legible enough, they all play a reason why you may not make the marks. At this level, at professional level, you know, if you charter ICE, you are seen as somebody who has a high level of knowledge in accounting and finance. You cannot be at that level and have an illegible handwriting. So make sure that you work on your handwriting and everything. They are all important. It says, for instance, a candidate started a question on page 1 and then continued on page 18 with no reference on page 1 to the continuation on page 18. Can you understand what the examiner is saying?
Oh.
You started on a page, maybe out of pressure, you left it and you continued another question. Then later, when you went to continue, you didn't reference that you have continued on page 18. You see, once you have worked on page 1, if you don't continue on page 2 and later you are going to continue on page 6, under the page 1, you write continuation at page 6. Are you getting it?
Yes, sir.
Yes, sir.
You need to draw the examiner's attention to that. Now, standard of the paper with general performance of candidates. The general performance of candidates was far below average. About 57% of the candidates scored less than 40% of the total marks, while a candidate scored as low as 2%, single 2.
Ah.
You say, if we tell you this, If we tell you this in class, you have been doubting. Here is the chief examiner telling you that somebody, a human being with 2 hands and 2 legs, he woke up in the morning, took his bath, dressed nicely, and left to the exam hall. He paid lorry fare and everything and went there and came out with 2%, 2/100. Meanwhile, even if you write the introduction to the statement, Okushe Limited, the Okushe Limited and the statement of correction, that one alone will give you 2 ticks. Statement of changes will give you 2 ticks. Are you saying that with all those free ticks, didn't work his way out and he got 2%? You will see that clearly this person came there to set a record.
2%. Hey,
No,
how
but
is it possible?
if you write FR and you get 2%, are you not setting a record? Somebody gets 90 and he's giving overall best student. Then you also get
Yes.
2 and also
But how can somebody get 2%?
maybe that's the award. Maybe that's the
Wow,
award.
2%.
Mm.
Hey. Hey, that was 2%. The person didn't write anything. No.
He says that what? The poor performance could be attributed to inadequate preparation by candidates or the low level of education achieved in their previous level of studies. A few excellent candidates scored more than 66% of the total marks. So you see, you sat in the exam hall with some colleagues. At the end of the day, they ended up scoring more than 66%. The high level of performance by candidates was concentrated in Accra, Tema and Ho. Of course, that is where they always pass, Accra, Tema and Ho. The low performers were centered in the rest of the regional centers, including a few in Accra. Notable strengths and weaknesses. Candidates who prepared adequately were ready for the examination and scored above 50 marks, with a few candidates scoring more than 70% of the total marks. The candidates' strengths were in preparation of consolidated financial statement in question 1, the standards in question 2 and 5C. So you see, the standards, they said the one in question 2 and 5B and C, and ratio analysis in question 4. These are areas which any serious candidate would not like to ignore while preparing for the exams. Console and interpretation. The examiner is telling that any serious student who is dreaming of passing, if you don't understand your console and you don't understand your ratios, don't go to the exam hall at all. Because at the end of the day, the question 2, which is the standards, and the question 4, which is the preparation of single entity statements, that is where you are going to struggle. So because you know you will struggle there, the ones that you can get your marks easily, the console and the interpretation, sweep your mark. If I were you, I'll make sure that in my theory, ethics and its related issues, in fact, that 15 marks, I'll just look for some 10 marks quietly. Then I go to console, out of the 20, I'll look for 15. That makes me 25. Then I go to interpretation, out of the 20 interpretation, I also look for another 15 there. So the moment I do that, 15 year 10, 15, 15, 10, I've gotten 40 of the marks. Then I now relax. So from standards and preparation of accounts, we are looking for just 10 marks. The moment you attach 1, 2, 3, you are gone. So this will serve as a lesson for you. Yes, let's look at question number 3 as usual. Now, look at something. In this year, a correction was made to the question paper. Now, look at this. The freehold property, look at the freehold property. It said at cost, 1st October 2017. Meanwhile, the trial balance itself is at 30th September 2017. Can you see?
Yes.
Can you see there's an error there?
Yes, sir.
It means, are they saying that they bought the property after the year end? Can you see? Hello?
Freehold property at cost, 1st October
Property
2017.
at cost. The date is 1st October 2017. Meanwhile, the financial statement itself is being prepared at 30th September 2017. So are they saying that they bought the property after the year? That date was wrong. I think they corrected it to 1st October, I think 2008. I think it's 1st October 2008. 2007 also. I think it's 1st October 2007. It's not 17. 2007. It's 1st October 2007. So note that. Can we move on? Can we move on?
Yes.
Okay. So let's go to the requirement of the question. The requirement says prepare a statement of profit or loss and other comprehensive income for Binkabi Limited for the year ended 30th September 2017 and prepare a statement of financial position. Then I told you that for such questions, yes, your first page, you title it Binkabi Limited, statement of profit or loss and other comprehensive income for the year ended 30th September 2017. So your P&L should take one page. Then you go to the next page, Binkabi Limited, statement of changes in equity for the year ended 30th September 2017. Your statement of changes in equity should also take one page. Then the statement of financial position, 1.5 page. Normally 1.5 page will be okay for the statement of financial position. So you leave those pages and then I will start working from the footnotes. So let's work from the footnotes. Note 1, Binkabi Limited's revenue includes 16 million goods sold to Kofi on 1st October 2016 at the beginning of the year. The terms of the sale are that Binkabi Limited will incur ongoing service and support costs of 1.2 million per annum for 3 years after the sale. Binkabi Limited normally charges a gross profit of what, 40% on such servicing and support work. Ignore the time value of money. You see, you've sold an item for somebody, and you've been doing support services for the person. Let's assume like air conditioning. You sold the air conditioning for the person, and then every year you come and do servicing and maintenance for the person. And then they are telling you that the servicing costs, they are telling you that he will incur ongoing service and support cost of 1.2 million per annum for 3 years. So anytime you are coming to do the servicing, the cost you incur 1.2 million. But after he incurs that cost of 1.2 million, he will add a margin, a profit margin of 40% to it and charge it to the customer. Is that clear? Is that clear?
Yes.
Yes. If he comes to do the servicing will cost him 1.2 million. But then that's the cost he will incur. So for his profit, he will add 40% profit and charge to the customer. What it means is that they have recognized, they say it is in the revenue. So he has recognized all the 3 years revenue of the service, the service and support. He has recognized it in revenue. But then we are taking revenue for only this year. You are entitled to that of this year. So the rest of the remaining 2 years is an advanced revenue. Is that not it?
Yes.
So every advanced revenue will be recognized as a liability, true or false?
Yeah.
Some of you are doing public sector. I'm the same person who solved public sector questions. So you should draw your attention. Anytime you receive revenue in advance,
It's a liability.
anytime you receive revenue in advance, it's a liability. So what we mean is that we will calculate the advance revenue. So let me do the workings. Let me do the workings here. The workings. So working 1. Let me say the deferred revenue, the advanced one. It means that this year one is there. So the 2 years one. So let me say the 2 years cost. 2 years cost. That's 1,200 times the 2 years, which will give you what? 2,400, right? Right?
Yes, sir.
Now, but this is a cost. And you know cost plus profit is equal to what? Sales. So if they are telling you the margin is 40%, it means that a margin of 40%, sales should be 100%. So the cost will automatically be what? 60%, right? Right? Therefore,
Yes,
we are
sir.
saying if the cost, which is 60%, the cost, which is 60%, the cost, which is 60%, is equivalent to 1,200. Then the sales value corresponding to that, which is 100%, will be equivalent to what? More. If more,
Let's
Let's
divide.
divide.
So then go up and say, we'll then go there and say, okay, then the sales value will be, the sales value corresponding to that cost will be, yes, 100 over 60 times 1 to 100, and I'll give you what? Oh, sorry, it's 2,400. The cost is 2,400. That's twice. So you are saying that the cost is equivalent to 2,400. Therefore, this will be 100 over 60 times 2,400. What is it giving you?
4,000.
4,000.
4,000. It means that the deferred revenue is 4,000. So working two, you take the revenue and take out that advance from it. So give me the opening balance of revenue.
380,000.
Where is the revenue in the trial balance?
First one.
Revenue.
The credit side.
380,000. Can you see?
380,000.
So revenue is 380,000. We'll take the deferred revenue from it. The deferred revenue. We'll take that 4,000 from it. Making the revenue now what? So what is now?
370.
2,000.
376,000.
Yes, sir.
So now the deferred revenue we've taken, I mean, is 4,000. So we have to split it into a current and a non-current, right? Yes. So the deferred revenue liability, we have to split it into current and non-current. The total liability, so the total was 4,000, right? The total was 4,000. This 4,000,
Yes,
immediately next year, 2,000 will be charged. So a current liability of 2,000 and a non-current of 2,000. Exactly. So we have current of 2,000 and then a non-current of 2,000. Please, you understand what I'm doing? I'm splitting the 4,000 into non-current and current, so that when I'm preparing the statement, you understand. So that same 4,000, we split it into 2,000 non-current and 2,000 current. Are we okay?
Yes.
Yes, sir.
Do we all understand note 1?
Yes, we do.
I'm not hearing the voices. Do we all understand note 1?
Yes, sir.
Yes, sir.
Okay. Then let's go to note 2. It says administrative expenses include an equity dividend of 12 million paid during the year. Is this correct? Administrative expenses should it include equity dividend?
Oh, sir.
No.
No.
Do you remember this is the third time we are seeing this?
Yes.
Are you aware this is the third time we are seeing this?
Yes, sir.
Dividend, which is always wrongly treated as an expense. I told you this is one of the things you must be careful about. Don't say I didn't tell you. So working 4, yes, administrative expenses. So we need to take that dividend out. Administrative expenses. So give me the administrative expenses.
500.
Let's check the trial balance. Where is the administrative expenses? Here. Can you see?
Yes, sir.
That's what, 50?
50,500.
$50,500. Then what do? You take out
The equity dividend of 12 million.
So the equity dividend was 12 million.
Yes, sir.
But you know, administrative expenses, other issues can affect it. So leave a lot of space for it, about 7 lines, and there we go. Next note 3. A 5% convertible loan was issued for proceeds of 20 million on 1st October 2015. It has an effective interest rate of 8% due to the value of what? The conversion option. So, debenture is a loan. It must be measured at what? Amortized cost, right?
Yes, sir.
Yeah, so 5% convertible loan. They said it was issued for a cash proceeds of what? 20 million. So if the cash proceeds is 20,000, then the nominal interest, the one which should be our cash paid, that's our cash payment. What's the interest rate attached to 5%, right?
Yes.
So the nominal interest will be 5% of 1,000. So 5% of, what is 5% of 20,000? That's 1,000.
1,000.
Right? So
Yes,
we'll
sir.
now measure amortized cost. We'll take the year, the opening balance, then the effective interest, effective interest at what? 8%.
8%.
The balance carried down.
The cash paid, and I will take the closing balance. So they said they issued it on 1st October 2015. That means up to 30th September 2016, previous year, they did something. It was like this. It means that previous year, the opening balance was 20 million, let's say 20,000. Give me 8% of 20,000. 8% of 20,000.
1,600.
1,600.
1,600. Okay, let's see what the balance is in the trial balance. Check the trial balance. Maybe I've done first year for us already. Check the trial balance and give me the value of the loan. Let's look at it. What is the loan? 5% convertible loan note. 18,440. Can you see?
Yes.
18,440. So it means that in the current year, up to 30th September 2017, means they've done some already. The opening balance is 18,440. Give me 8% interest. 8% interest. 1,475, right? Right?
1,475, yes.
And we'll pay cash of 1,000. What will be the balance? 18,440 plus 175 minus. That's 18,915, right? Right?
Yes.
Yes, sir.
Now, as usual, you know this will bring you an extra finance. Remember? You just got a similar example.
Susanna Poma, please, can you mute?
So extra finance cost. Susanna, when it happens that way, it means you have joined the class, but your concentration is not in the class. So you better go off. You disturb the whole class. So extra finance cost. Yes, what is the effective interest? The effective interest is what? 1,475. And then what? The nominal interest. You see, you saw this same example in the previous year, right?
Yeah, previous question.
So it will tell you where ICA, their focus is. They always want to make sure you understand these basic things about it. So far, the things we've seen throughout our study of single entity, now you see dividends that are wrongly classified as expense, the components of finance costs, available for sale financial instruments and held for trading. Then you've also seen held to maturity instrument, that's debenture. Are you getting it? Then you've seen issues on income tax. They will always be the question for you. All these things, they will always be in the question. So at least about 7 footnotes that will be given to you, you have control of our 5 of them. Why should you worry yourself so much? So that's the extra finance cost from the debenture. Let's go to note 6. During the year, Binkabi Limited sold an equity investment for 11 million. At the date of the sale, it had a carrying amount of 8.8 million and had originally cost 7 million. Binkabi Limited has recorded the disposal of the investment. Let's tackle that first. What working number is this?
6.
So we are going to work in 6. Working 6. You see, equity investment has come again. So you see, every day there is question on equity investment. You always see them. So master them. They said he sold some for 11 million, but at the date of the sale, he had a carrying amount of what? 8.8. What it means that, let me look at the disposed investment. So the disposed equity investment. They said it has originally cost 7 million. Now it's originally, it cost 7 million, but at the time they sold it, the carrying amount was what? 8.8 million. So it means that now they have a carrying amount of 8.8. 8.8. Meaning that previously it has gotten some gain already, right?
Yes.
And then they said what? The remaining equity investment, that's 26.5 million, had a fair value of 20. The reserve in the trial balance represent the net increase in value of equity investment. Binkabi Limited made an irrevocable decision at initial recognition of these instruments to recognize all changes in fair value through other comprehensive income. Are you listening?
Yes.
He said it recognizes all changes in other comprehensive income. It means there was a fair value gain here, which they've treated in OCI previously. Previously, they have a gain of 1,800, which they've treated in OCI. And now they've disposed the investment at 11 million. So you compare the carrying amount today to the disposal proceeds. So the sale proceeds. So the sale proceeds of what? 11 million. When I compare it to 11 million, what am I getting? A profit on disposal of what?
4,000.
Of what? 4,000. Hey, how 4,000? 8,800 to
2.2.
2,200.
Oh, I thought you were comparing the cost to the sales proceeds.
No, we are now, the cost have been compared to the carrying amount. As of today, the carrying amount is 8.8. And now we sold it. So we are comparing the 8.8 to the 11 million. Are you getting it?
Okay, sir.
Good. And then the question says that they said what? He decided to record all fair value gains through other comprehensive income and makes a transfer of realized profits from the other reserve to income surplus on disposal of this investment. That means once they dispose, so let me call this 6A. Once they dispose, if there is a realized profit, they've been transferring. So which one is the realized profit? Let's look at the realized profit. Now that they sold this gain now becomes a profit. Is that right? Because now the thing has been sold. Agreed? Please, do you all agree?
Yes.
Yes.
So the realized profit will be the previous gain, which is now a profit. So the previous gain, which is now a profit in OCI, that is in 6A. Previous gain is what? 1,800. It has now been realized. Before, we've now sold it and we've realized another 2,200. Are you getting it? This one is also another profit. Do you understand?
Yes, sir.
Now that we've sold it, it means all the two amounts will come, the 1,008 and then the 2,200. Please, do we understand?
Yes, sir.
Now, once I put this in the WhatsApp that we were going to solve it, somebody called me about, I don't know, Bismarck, something. Somebody called and said it's Bismarck, but he's trying his hands on the question in advance. He didn't understand this part, how ICA treated it. And I told you, ICA solutions, you don't have to refer to them. You have to solve the question using the understanding your lecturer has given you first. If you don't get it, then you now look at the ICA solution. But because you solved it your own way, now whatever you look at, you understand. So the previous gain is 1,800, and then the current gain on disposal. So the current profit on disposal is also what? 2,200, right? Also 2,2. So it means that the total realized profit is what? 4,000. Are you getting the point?
Yes, sir.
Do we understand?
Yes, sir.
It's either you do it this way, or you can say, if you want to get a realized profit, somebody can also say that the original cost of the investment, since the investment has been sold, they will say the original cost of the investment was 7 million. And then now they've sold it for 8 million. So now they sold it for 11 million. So all this is a profit on disposal. This will be transferred. 4,000. So this one will be transferred from OCI to what? Retained earnings. Is that clear?
Yes, sir.
Do we understand? I'm not hearing the voices. Do we understand?
Yes, sir.
Yes, sir.
Let me do my roll call quickly. Angela Enchua. She has quickly unmuted it. They are unmuting. Yeah. The moment they saw that I was coming to do roll call, I can see they are unmuting fast. They don't want me to mention their name, so they are now unmuting. Okay. So you can do this. Then they said the remaining equity investment, the 26.5 million in the trial balance, have a fair value of 29 million now. So we can look at the remaining equity investment as I'll call the remaining one 6B. The remaining one.
Big man.
The background is noisy.
So the remaining equity investment. Now, this is what I'm now going to do. This is a session that was designed to help students who need help to pass. Are you listening? Hello?
Yes. Hello.
This rush hour session was designed by Prof to assist students who need help to pass the paper. Therefore, anybody who disturbs the class, I will assume that you don't need that help. So those who need it should concentrate. And so henceforth, what I'm going to do is, if I hear a noisy background, I'll check and see whose background is noisy, and I'll temporarily take you off. Are you getting it?
Yes, sir.
I think I didn't want to do that from the beginning, because after all, the thing you are doing is charitable. So something that is charitable, why will you punish people for it? Are you getting the point? The understanding I have is that this is something charitable. So something that you are giving out charitably, why will you also punish people for it? So ethically, I decided on humanitarian grounds that I was not going to punish anybody for that. But I also expect that as matured as you are, you must be disciplined. There are some private schools, some private GH town. When you go there, the students are so disciplined, they don't talk. I visited a private school in Tema. One of their teachers is a friend. I visited him and I was shocked. I stood for over 2 hours. The GHS2 class, over 2 hours, they did integrated science, and then they came back to also do mathematics. They were quiet. You don't see anybody talking unless the teacher mentions your name. I was shocked. And so if as mature students, you cannot comport yourselves and you will disturb the class, then I'm going to take more robust intervention. I would go to the background and check whose background is noisy. If I find that your background is noisy, I'll block you. And I will not just sack you, I'll also suspend you. If I sack you, I'll also suspend you. You will not have access to join the rush hour again. I want to be fair and fair. All right, so let's move on. So part of the investment has been sold. Now the remaining investment in the trial balance, they said the 26.5 in the trial balance. Let's locate it. This is the trial balance. Locate the 26.5 for me. They said there is a remaining investment, which is 26.5. Locate it for me. Can you see investments in equity 26.5?
Yes, investment in equity instrument. The debit side.
So they are telling you that the remaining one, it has a balance of 26.5, 26,500. And they are saying that for the one that is remaining, its fair value is, let's look at it. He said the fair value is now what, 29 million. Can you see?
Yes, sir.
So if I compare it to the fair value at 30th September 2017 is what? 29 million, so 29,000. What is happening? This will be a fair value gain. Remember the instrument itself, we are charging it to what? OCI, is that clear?
Yes.
It's supposed to go to OCI. The reason why the other one is P&L is that one now it has been sold, so the money has been realized. Is that clear?
Mhm.
So that will give you what? 2,500, right?
Yes.
So now the total gain for the year. So total gain to OCI for the year. So for this year, what was the total that has gone to OCI? The disposed investment, the disposed one, there was a gain in OCI of how much for the current year? 2,200, right? Which later became a profit, right?
Yes.
And then the remaining investment too, the remaining one too, another one has gone to OCI. That is what? 2,500. So in effect, the OCI for the year is for what? 700. What it means is that when we go to OCI, we'll record a total of 4,700 for the year. But out of that 4,700, 4,000 has been realized. Then we transfer it to retained earnings. So you do that in the statement of changes in equity. Is that clear?
Yeah.
So this current year, you have a gain to OCI of 4,700. When you go to the statement of changes in equity, you recognize the gain for the year of 4,700. Then out of that 4,700, you transfer the 4,000 realized one to retain earnings. Is that clear?
Yes.
So let me come down and explain this carefully. This is where the person raised concern. If you are on Bismarck, if you are on, let me deal with you. I'm saying that the investment, they've separated it into two. Part of it was disposed and some were left. The one that was disposed, they said they bought it at 7,000. But at the time we were going to dispose, its carrying amount is 8,800, meaning that previously they've gotten a gain of 1,800. Now, when you compare it to the sale proceeds of 11,000, the profit on disposal is what? 2,200. That is another profit. So for the one that has been disposed, if we want the realized profit for the year, is the sum of the two of them, the 1,008 and the 22. Do you understand that one?
Yes.
Making 4,700, 1,008 and 2, making 4,000. Or
Yes,
you
sir.
can see, because it has been sold, you can simply compare the cost of 7,000 to the sale proceeds of 11,000 and get a 4,000. Apart from that, some of the investment was left. The one that was left, they are telling you that it was 26.5. Now they fair value it to 29,000. So we have a gain to OCI of 2.5. So the gain for the year was 2. The gain for the year, which initially went to OCI before we transfer, there are 2. You know, initially you put it in OCI before you transfer it in the statement of changes in equity. So the first one,
Yes.
yeah, we had 2,200. Remember this one, this 1,008 previously, that was previous year. You know, this one was previous year. This 1,008 was previous year. This one was
Yes, sir.
This one was the previous year. They did that previous year. But the current year, this previous year, but the current year, it has a current amount of what? 88, which brought 22. So this 22 was this year. So if we are doing P&L, you know P&L is profit or loss and other comprehensive income for the year. Are you getting the point?
Yes, sir.
For this particular year. So for this particular year, we have a gain of 22 on the disposed one, plus another gain of 27 from the remaining one. So this is the remaining one. The remaining one, another gain of 25. So when we add the 22 and the 25, that will give you 47, which is the total gain for the year. And so when we go to other comprehensive income, which is the gain for the year, we will recognize the 4,700. Then when we go to statement of changes in equity, out of this 4,700, 4,000 has been realized. So we'll transfer that 4,000 to retain earnings. Do we understand? Do we understand?
Yes, sir.
Sir, please kindly come again.
I should count the whole thing again.
Please, I'm talking about the last end, the total gain to OCI.
The total gain for the year, for this particular year, we got
Yes, sir.
2,200 from the disposed one. You agree?
Yes, I agree.
And then we also got 2,500 from the remaining one. Are you getting it?
Yes, sir.
So the total gain for the year is 4,700. And I'm saying that this 4,700 is for the year. So that is what we recognize under OCI. OCI, other comprehensive income, will say gain on available for sale instrument, 4,700 for this year. After we've recorded 4,700 for this year, when we go into the statement of changes in equity, you put the 4,700 for this year, but out of it, we realize that previously we have realized 4,000. 4,000 has become physically realized. Can you see it here?
Yes, sir.
We will go and transfer that 4,000 from it to retain earnings. Is that clear?
Okay.
Okay, let's move on.
Thank you.
The next footnote, it says the balance on current tax represents under or over provision. Clearly, I told you that the moment you see taxation, what must you do? When you see income tax,
You put two accounts, the deferred account and there's tax expense account.
Excellent. So you open two accounts, 7, deferred tax code. So let me open deferred tax provision. I think now you have clear the tax standard now. I've made it clear for you, eh?
Yes, sir. It's quite clear now.
Then you open income tax expense. It has frustrated you for long, don't worry. So income tax expense. Now let's read. The balance on current tax represents under or over provision of tax liability for the year. I think I've taught you that when you see income tax in the trial balance, it's an over or under provision, right?
Yes, sir.
Yes.
That's what the question is explaining for you. They are telling you that the balance on current tax represents under or over provision. The directors estimated the provision for income tax for the year ended 30th September 2017 at 16.2 million. But at 30th September 2017, the carrying amount of Binkabi Limited's net assets were 13 million in excess of their tax base. What is this information about? Difference between carrying amount and tax base. That is the temporary difference, right?
Temporary difference. Yes, temporary difference.
So to solve your deferred tax provision, what did I teach you? You take the opening balance,
balance, and the trial balance and the current.
Let's go to the trial balance. Look for the deferred tax for me this year. Deferred tax. Opening balance.
5,400.
The last item there.
5,400.
5,400. 5,400. Then you compare it to the closing balance. Now, the closing balance is the temporary difference they've given you times the tax rate. So the question gave you temporary difference of what?
Yes.
13,000. So 13,000.
13 times 30%.
At the 30% tax rate, which will give you what?
Yes.
3,900, right?
Yes.
Right?
The decrease in tax. Decrease in tax.
Which will charge to what? P&L, right?
Yes.
So the decrease is what? 1,005, right?
Yes, 1,005.
So when we come to income tax expense, there's the current year estimate. Do you remember all? Do you remember all this?
Yes. It's a 16,200.
They said the directors have estimated 16,200 for the current year. Can you all see?
Yes.
Current year estimate 16,200. Then you go to the trial balance under or over provision. So let's go to the trial balance. Let's go to the trial balance. Check if you see current tax or income tax on it.
Yes.
Check.
Yes, it's under provision. 2,100. 2,100.
Is that the debit side?
Okay, current tax. It's at the debit side. So is it an under or over provision?
Under provision. We under provided. So you add it.
Excellent. So we have under provided. So under provided. Excellent. If you do this, then it means you are really following what I'm teaching. So under provision, of how much? 2,100, eh? Yes, more tax, right?
Yeah.
Then now the deferred tax movement. Now it was a decrease. So you charge the deferred tax decrease. Deferred tax decrease, which we have in working number what? 7 of how much? 1,500.
1,500.
So when you let it off, what will be the closing balance?
16,800.
16,800.
800.
I believe the income tax is very clear now.
Yes, this one there, yes, it's clear.
Okay.
One day.
Any day dim I get us there. At least if we can't get
Non-current
any note right, this one part there, we have to get it right.
Are we following? Is everybody on course?
Yes,
Did I
sir.
do my roll?
Yes, we are.
Yes, please.
I'm doing the roll call. Let me hear those who are following. Angela, entry.
Angela, when who am I?
Oh, what to hear your name? Please hold on. Let me hear them. Emmanuel, who is Emmanuel?
Sir, I'm here.
Nicholas Yao Frimpong.
Yes, sir, I'm here, sir.
Yao.
Oh, I'm here.
Angela entry.
Yes, sir.
Daniel, Angela, your volume is very low. Your voice seems to be at a distance. Daniel Busumpra.
Yes, sir. Sir.
Manuel Efa.
Yes, sir.
Enoch.
Yes, sir.
Francis.
Yes, sir.
Georgette Ofori.
Yes, sir.
Gifty.
Yes, sir.
2 iPhones.
Yes, sir.
Are you the same person using double iPhone? Then Francis. Irene Kuga. Irene Kagwa.
Present, sir.
John.
Yes, sir.
All right. So as many as people I see there tells me, those who have muted, let me come to them. Yes, Ajete Aziz Ankra.
Yes, sir.
Okay. Irene Asiedu, Helena, Isaac.
Yes, sir.
Yes, sir.
Right. So if you are there, let's move on. So that is that. I says non-current asset. The freehold property has a land element of 13 million. The building element is being depreciated on straight line basis. So they said the building element is depreciated on straight line basis. And then it says plant and equipment is depreciated 40% per annum using reducing balance method. Binkabi Limited's brand in the trial balance relates to a product line that received bad publicity during the year, which led to falling sales revenue. Now, a brand is an intangible asset. After recording falling sales revenue due to bad publicity, this is an indication of impairment, true or false?
Yes.
Yeah, true.
So let's do depreciation and do amortization. Let me do depreciation and do amortization. So working 9. Let me do depreciation. The depreciation. They said the freehold property has a land element of 13 million. So let's go there and check. The freehold property. That's what 63,000. And they said it has land element of 13. So we'll take the land element out. So let me say freehold property. Freehold property. 63,000, right?
Yes, sir.
If we take the land element out, you know the land element will not depreciate. So let's take that out. Land element of 13,000 out.
50,000.
So that's the building element is what?
50,000.
50,000.
Let me bring this here a bit because I'll total them. So let me bring this here. The whole property is 63,000, right? Land
Yeah.
element 10,000. When we take it out, the building element becomes what?
50,000.
50,000. So the depreciation charge will be, let's go and look for the useful life. Yes. Now the plant, the useful life, let's read. Did he tell us the useful life? He said,
So the straight line method,
10 years.
10 years.
no, this that's the brand though. The 10 years for the brand. Read work. He said the freehold property has a land element of 13. The building element is being depreciated on straight line basis. Plant and equipment is depreciated 40% using straight line method. The Inkabi Limited brand in the trial balance represent a product land that received bad publicity during the year, which led to falling sales revenue. An impairment review was conducted on 1st April, which concluded that based on estimated sales, the brand had a value in use of this and a remaining useful life of 3 years. However, on the same date of the impairment review, the brand received an offer to purchase the brand of 15 million. Prior to the impairment review, it was being depreciated using straight line method over 10 years. No depreciation or amortization has been charged on any non-current assets. So we don't know the useful life of the property. So let's go to the P&L and then see the property. Watch something. The freehold property, I told you that the date was 1st October
2007.
So from that time to now, we are now in 30th September 2017. That is 10 years. Can you see it is 10 years?
Yes.
So they've used it for 10 years. Meanwhile, they are telling you that accumulated depreciation as at 1st October 2016 was what?
8,000.
8,000. So if the thing has been used for 10 years and it has accumulated 8,000, so it means that as at 1st October 2016, the current year, then it has been used for 8 years, right? Because if the thing has 10 years, so like freehold property at cost 1st October 2008, not 2007. Let me check the correction here. I have the correction here. Let me check it. Yes, it's 2008. Please correct that 1st October 2008. That's 2008. So from 2008 to 2016, that is 8 years, right?
Yes.
Hello?
Yes.
So they've used it for 8 years and accumulated depreciation is 8,000. It means the depreciation for a year is 1,000. Is that right?
10,000.
So that's 8,000. 8,000 divided by what? 8 years, which will give me 1,000. Please, do you understand what I'm saying? They've used it from 2000 up to 2016. They've used it for 8 years. And after using it for 8 years, the accumulated depreciation is 8,000. Meaning that if we've used something for 8 years and it has accumulated 8,000, it means a year is 1,000. Is that clear?
Yes, sir.
Yes.
That's the charge for the year, 1,000. Then they said plant and machinery is depreciated. Plant and machinery is depreciated what? 40% what? Reducing balance, right? So give me the plant and machinery here. Give me the plant and machinery. Plant and machinery. Give me the cost and accumulated depreciation.
So the cost is 42,200.
I can't even see the thing. Where is it? Okay, it's here. The cost is 42,200, right?
Yes, sir.
So cost is 42,200. minus accumulated depreciation is what?
19,700.
19,700. Reducing balance means on the carrying amount, so times the rate is for 40%, eh? So calculate that for me. What is that giving you? 42,200 minus 19,700.
9,000.
What is it giving you?
9,000.
40% is 9,000.
Yes, sir.
So that's giving me 9,000. So then the total depreciation for the year is what?
10,000.
Right? Let's deal with the brand and get amortization. Don't add depreciation to amortization. They are two separate items. Don't make that mistake. So let's go to working 10 and work for the brand. Now the brand, since I'll capitalize it, let me work it in full. So the brand, separate money. Why not actually it was separate money. Then try to separate money rubber. Yes, the brand.
So the brand at cost 30,000.
The cost was what? In the travel,
30.
and what's the cost? Where is it? I can't even
30.
see
30,000.
soft copies. What I'm working with, I can't see anything. I can't see anything. Where is the brand? Okay, brand at cost 30,000, right? 1st
Yes.
October 20. So what it means is that the cost at 1st October 2013 cost was what? 30,000. 30,000. And then the question told us that prior to the impairment review, it was being amortized over what? 10 years, right?
Yes.
So let's say amortization. They will intentionally trick you and mention depreciation to see if you also write depreciation. Then they will mark you wrong. You must know it's a trick. So
It says
amortization,
intangible asset.
30,000 divided by what? 10 years, which will give you 3,000 per annum, right?
Yes, sir.
So the amortization on it is 3,000 per annum. Now, when did they do the impairment review? They said an impairment review was conducted on 1st April 2017, right? Right?
Yes.
So that means they used it up to 1st April 2017. So let's find accumulated amortization up to 1st April 2017. So accumulated amortization. Now, this is the way I present my standards. I don't work it separately. I'll keep the cost separately there and be doing the workings and be charging at the same time. So accumulated amortization. Now, from 1st October 2013 to 30th September 2016, that will be a period of what? 3 years, eh?
Yes, yeah.
So these 3 years. Then 1st October 2016 to October, November, December, January, February, March to 31st March 2017. This will be a period of 6 months. Is that clear? Right?
Yes.
So this will give us 3.5. So accumulated amortization as allowed is 3.5 times the 3,000. So multiply for me. 3.5 times the 3,000 will give us accumulated. What do we get?
500.
10,000.
500.
So this is 10,500. So accumulated amortization is 10,500. When I take it out, I'll get carrying amount of what? So the carrying amount at that date of 31st March, which is the same as that 1st April. So by 31st March, the asset is valued what? 28,500, right? 18. Right?
19,500.
Hello?
19,500.
19,500.
9,500.
500. So this is the current amount at that date. And they said they did an impairment review And then the impairment review on 1st April 2017, that's 31st March 2017, concluded that based on estimated features, the brand has a value in use of 12 million and a remaining useful life of 3 years. However, it received an offer of 15 million to purchase it. Recoverable amount is the higher of value in use and fair value.
NPV.
Not NPV, NRV, net realizable value, also called fair
NRV.
cost to sell. So we have a value in use of 12 million and then a net realizable value of 15 million. Which one will be the recoverable amount?
15.
So when we compare the recoverable amount, this is my network.
Impairment.
So the recoverable amount is what? 15 million. Let me send it up. Please, a minute, let me pick a coin. Yeah, so the recoverable amount is 15 million. So what will be the impairment?
4,500. 4,500.
So we have an impairment of what?
4,500.
500. Good. So this is the recoverable amount, but this recoverable amount is at 1st April 2017. Though. Remember, our year end is what? 30th September. That means we must still amortize up to 30th September to know the final balance. Is that clear?
Yes.
Yes. Yes. You have to still amortize it.
So amortization from 1st April 2017 to 30th September 2017. That is going to give
6
cost
months.
of 15,000 over. They say it has a remaining useful life of 3 years at this date. But then this is a period of what?
Yes,
6
times
months.
6.
6 over 12. You see how
Times 6 over 12.
So this is the way I present my standards. You see, whilst I'm solving, I keep the cost at one side. I open my sheet. So this is the way I present it. I keep the cost at one side. Whilst I'm doing the working on the left, whatever figure I get, I put it under the cost and charge. Are you getting the point?
Yes.
Once you do that, the examiner is able to see your working and your solution at the same time and give you the marks. So multiply for me. 15,000 divided by 3 times 6 months. I'm getting
2,500.
3,750.
Hey, how? 2,500.
2,500. Oh.
2,500. The network has started misbehaving.
Yes.
So 2,500 and write it well. That's 2,500. So 2,500. When we take it out, what will be the carrying amount? 12,500, right?
Yes. The kind amount. Okay.
Okay. So the total amortization for the year. So amortization for the year, let's calculate amortization for that year. So let's calculate amortization for the year. So amortization for the year. Now, the year started from when? The year started from when? 1st October 2016. So 1st October 2016 to 31st March, give us 6 months. What this? A minute, let me pick this call. Yes, so amortization for the year. Now, for that 2016 year, the year started from 1st October. So 1st October 2016 up to 31st March 2017. By then, we have 6 months of 3,000, if you remember. By then, the depreciation for a year was 3,000. So 6 months of 3,000 will give us 1,500. Do you agree? Do you agree?
Yes.
Then later, we also got from 1st April 2016, from 1st April 2016 to now the 30th of September. Oh, this is my network. So now to 30th of September, September 2017. That's what you have here. That's what you have here, 2,500. Can you see? Can you all see?
Yes, sir.
Yes, sir. You can see.
So that will make it 4,000. So that will make it 4,000. That will make the total amortization 4,000. So this is the total amortization for the year. The question said depreciation, amortization, and impairment are all charged to cost of sales. All of them are charged to cost of sales. So we need to prepare our cost of. What working number is this? The brand is what working number? Okay, so the brand is working 10.
10.
So yes. Somebody is calling.
No, he said it's working number 10.
Let's go to 11. Please check your background before I remove you. Okay. Number 11. So working number 11. Yes, working number 11, cost of sales.
Aziz, please.
He has refused to listen, so let me do justice.
Sir, he has listened. I beg you. He has listened.
Okay, so cost of sales So go to the trial balance, cost of sales. Let's see the details. Do we have inventory or we have cost of sales as a figure?
So we have
I
it
think
as a
as a figure, right?
2468.
So we can take the opening balance. Since we have cost of sales as a figure, you can take the opening balance. What's the opening balance?
246,800.
246800.
246,800. So 246,800. They say depreciation amortization should be charged. So depreciation, yes, working 9. We got 10,000, right?
10,000, yes, sir.
We got 10,000 more cost. So we add it. We got 10,000. Then amortization. Amortization, that's what we've just worked in working 10. Which gives us 4,000, right?
Yes, sir.
And then impairments. Impairments also in working 10. Which gives us what? What was the impairment? Let's go up there and check. The impairment was
4,500.
1,500.
4,500. 4,500. 4,500. So sum them up for us. Sum them up for us. Mm-hmm. 246,800 plus 10,000.
265,300.
Confirmed.
265,300.
100.
Two six five 300. Okay, so this is all the workings. Whoever is taking the pictures for us, I'm going up so that you take from working number 1 before we prepare our statement and close. Therefore, students, you are fortunate that your lecture comes on a weekend, so you are able to get more time, right?
Yes, oh, yes.
You are not Christians.
We are. So we'll go after church. We'll go.
The second service.
We'll
Go after this.
go after the chatter. After we chatter, we'll go.
Okay, please, let's. There are some accounts we haven't closed. Let's close them. There are some accounts we
Personal
haven't.
pronoun.
Yeah, so the administrative expenses. When we took the dividend out, was there anything else left? Nothing. So let's close it. Please close it for me. Calculate for me and let's close it. Please calculate for me and close it. What will be the balance?
It's 500.
30 what?
8,500.
Is there any other account you haven't closed? I think we've closed all other accounts.
Yes.
Okay, so let's go and take our pictures. So let me start from here. Let me reduce the size for you. Okay, so my brother, take this one first. Who is taking the pictures? The same person. Do it well for us. Take this one. Are you
Yeah,
done?
the same person. You did very well. Yes.
So take 2, 3, and 4.
So please, let's take the first one again.
The first one again. Take this. Are you okay?
Yes, please.
Can I move?
Yes,
Yes.
please.
Yes, 2, 3, and 4. Take 2, 3, and 4. Are you okay?
Yes, sir.
Yes.
Take 5. Are you okay?
Yes.
Can I move?
Yes, sir.
Yes, sir.
Take 6A and 6B. Can we move?
Yes, sir.
Yes.
Can we move?
Yes.
Can I move?
Yes.
Yes, sir.
Take 7 and 8. Can we go on?
Done.
Can we go on?
Yes, please.
Take 9. Can I move?
Yes.
The brand. Take the brand. 10. Are we okay?
Yes.
Take the amortization and then the cost of sales. Take this one. Are you done?
Yes.
So now let's prepare the statement. Let's prepare the statement. What's the name of the company?
Nkabi.
Obi Nkabi.
Oh, it's 30th September. Okay, so we haven't done our PPE schedule, right? We haven't done our PPE schedule, right?
No, we
Yes,
haven't.
please.
So we'll leave it and I want to finish with what you concluded. Oh, this statement of profit or loss. The hand is now moving faster than the brain. Oh. Yes, so sales revenue. Revenue. If it's in the trial balance, look for it and give us the figure.
So we solved for revenue.
We solved for it in working 1. I think it was 380 and we took 4,000 out. So we had to
76.
raise 76,000. Cost of sales. We did it in working number 11.
265,300.
265,300. Should we take that out? What becomes the gross profit?
One 10700.
110, 700, confirm.
One
110, 700.
110,700. Okay,
Distribution cost.
a moment, please. Yes, so operating expenses, distribution, and admin. Give me admin expense. Admin expense, we worked it.
So we worked admin.
28,500, workings 4.
Where's the working?
Workings 4, 28,500.
Administrative expenses. Oh, this is my network. Very bad though. Two what? 38.
38,500.
Then distribution expenses.
17,400.
17,400.
400.
So operating profit gives us what? Yes. Operating profit,
54,800.
54,800. Finance cost. Finance cost. We don't have finance cost. I think the loan, the total was 1475. Check. It was working in the loan.
475 in the
So
workings.
the total of all is 1475. He paid 1,000. So we are taking the total. He has 8,000, but the total is what we take. Finance cost. Is there any investment income? Check the trial balance. Yes, there is investment income of 1,300, right?
Yes, sir.
Investment income, how much? 1,300. We'll add it to it. When you sum it, what is the profit before tax?
54625.
Confirmed.
54625.
Five four six two five. Now the income tax expense. We worked it in working number. Yes, income tax expense. We got 16,800. Right?
Yes.
Income tax is working number what?
It's 8.
Working what?
8.
8. So when you let it off, what are you getting for the profit for the year?
37825.
825.
Let me go up. Yes, so profit for the year. It's network. It's serious. So profit for the year, yes.
37,825.
30 what?
37.
37,825.
Then other comprehensive income. Yeah, we don't have a revalue gain, but we have fair value gain to OCI. So fair value gain on available for sale investments, which we charge to OCI. Do you remember? The total gain for the year, which we got 4,700, my brother. And I told you we'll transfer 4,000. Do you remember?
Yes, sir. I
Yes,
remember.
yes.
That was working on my what? That was working on my what?
Working number 6B.
So what will be the total comprehensive income?
42525.
So this is the P&L. Let's go to the statement of changes in equity. Let's do statement of changes in equity. Hey, this is Dinkabi. We finished Okushi already.
Sir, please, did you treat the loan interest paid?
Yes, the interest paid was 1,000, but there was extra finance cost of 175. So you add it to the full interest. That's the finance cost. Are you okay? Are you okay?
Sir, please, I'm checking.
You had loan interest paid. He paid 1,000, but then the whole interest was 1,475. So it's the full interest a year that will charge. Are you getting it?
Yes, sir, yes, sir, yes, sir. Thank you. Also, that's how come
For the year ended 30th September 2017. Now, what are the equity components there? What are the equity components of the statement? Share capital,
Ordinary shares, retained earnings, other
And
reserves.
other reserves.
we have share capital, then we have retained earnings, retained earnings. Yeah, there was no revaluation reserve, but what do we have? Other
Other
reserves.
Yes, sir.
So give me their opening balances.
So for the ordinary shares, 52,000.
52,000.
For retained earnings, 26 and 60.
Retained earnings is what?
26 and 60.
060.
Yes, sir.
What about other reserves?
5,000.
I can't even see the figures you have. Okay, other reserves 5,000. There was no prior year adjustment, but then for this year, end, we got profit for the year of how much?
37,825.
That will affect our retained earnings, 37,825. I think you all know profit for the year will affect retained earnings, right?
Yes,
Yes, sir.
And the fair value gain to OCI, that should affect what? Other reserves. That was how much? 4,700. Right?
Yes.
Yes, sir.
So that's 4,700. Then now the transfer. So you see the transfer they say we make. So now you say transfer to retained earnings. So transfer to retained earnings. That's why I told you now you transfer the 4,000 from the other reserves. Do you remember the realized profit?
Yes.
So you now transfer 4,000 from this other
4,000.
reserve. You transfer it from there and then you give it to retained earnings. Are you okay now?
Yes, sir.
Then you restate your balance. So restate your balance first. So please restate your balance. Share capital is what?
So 52,000.
52,000. Retained earnings. Wait, let me count down a bit for you.
67,855. 885.
67.
885.
67,885. What are our other reserves?
5,700.
Then now you pay the dividends out. The dividends was charged in the administrative expense, which we took it out. So yeah, so dividends was 12 million, right?
Yes.
Yes, sir.
From retained earnings.
So when you take it out, what will be your final balances? 52,000 for share capital. 55,80, right?
Yes.
Yes.
These are 5,000.
700.
Okay, let's go to the statement of financial position. So push Binkabi. Statement of financial position. as at 30th September 2017. So non-current assets. The network is slow, but gradually we'll get there. So PPE, since we have not done our PPE schedule, let's leave it where we have, okay, there is an intangible asset. Let's recognize that one first. There is an intangible asset, brand. So the brand, when we did the working, what was the final value of the brand? What was the final value of the brand? The brand,
12,500.
that was working number what?
10.
Hello, sir. Your voice is very far.
It's the network. You don't mean it's the network. Okay, so that's the brand. Then we have PPE, which we don't do. Then we have the available for sale investment. The available for sale investment, it became what? The remaining investment came to 9,000, right?
Yes, sir.
Hey, today my network is very, very, very bad. Let's finish it. Let's try and finish it. Okay. Then let's go to current assets. Yes, current assets.
Trade
So
receivables.
inventory. This next part has really frustrated me today. It's not easy. It has really frustrated me today. What is the inventory? Inventory.
8,000.
Receivables.
44,500.
Bank.
8,000.
Yes. Bank. 8,000 is debit, so physical cash. Then equity. So from our statement of changes in equity, yes, share capital.
52,000.
Retained earnings.
55,885.
Is it 5.8 or 5.5?
55.
55,885.
5.5.
885.
Okay, so 5.5.885. Other reserves.
5700.
5,700.
Yep.
Five 700. Okay, let's go to the non-current liabilities. Moment, we are almost through. Let's manage and finish it. So non-current liability. Yes, non-current liabilities. The deferred tax.
There was a deferred revenue liability as well.
Yes, so let's enter deferred tax and then that one. The network is too slow here.
$3,900 for deferred tax.
Working number what?
Working number 7. Shabro.
Deferred revenue. That's working number what, 3, eh?
Yes, sir.
2,000, right?
2,000, yes, sir.
Then the 5% convertible bond. Then the convertible bond was a 5% there.
5%, sir.
So the 5% convertible bond. We also worked it in working number what?
Working number 5.
Then you give us what? 18,915, eh?
18,915, yes, sir.
Then let's go to current liabilities. Gradually we are finishing. Let's master carriage and finish it up and then.
So under the current liability too, we have the revenue liability.
Yeah, that's deferred revenue.
Yes. So there we go.
Yes, the deferred revenue.
It's also 2,000.
Payables.
Payables was 42,900.
$42,900.
Yes, sir.
What about income tax, the current year estimate?
$16,200. Oh.
$16,200, right?
Yes, Prince, I hope I'm correct. Yeah.
Okay, let's do our PPE schedule and put a figure there. Let's do our PPE schedule and put a figure there. Let's do our PPE schedule and then let's fix the figure there and then we can do it. Let's just do our PPE schedule and close it. Let's be patient. It's slow, but we'll finish soon. So we have land, building, and then plant and equipment. Right? So let's. Plant and equipment, and then total. Yes, give me their cost quickly. Give me their cost quickly. If the network is in, let's use it quickly. Cost, the land was 13,000. Look in the depreciation working. Look in the depreciation working.
Land was 13, then the building was 50,000.
Let's be patient. Once it comes, we'll put it there.
Okay.
Building was what, 50,000?
Yes.
What about the plant and equipment?
42,200.
My network is slow, so it has affected the board. Let me just. Let's be patient, it will flow. Give me the accumulated depreciation. Building was what, 8,000, eh?
Yes, please.
And then plant and equipment was 19,700.
19,700.
Then the depreciation for the year. Depreciation for the year. Building was, I think, 1,000, and then P&E was 9,000.
9,000, yes.
What would this give us?
This will give us 41,000.
And this will give us what?
$13,500.
I'm almost true. Almost true. So sum them and get a total. When it comes, we just write it down.
67,500.
The total is what?
500.
Let me just write it down.
13,000. 41,000. 500. 67,500.
Yeah, confirm 67,500.
$67,500.
Yes, sir.
So later you can, due to our network issues, later you can do the totals. Later you can do your totals. So 67,500. So let me go and put it where the PP is. Is that 67,500, eh?
Yes, sir.
So please sum up all the assets for me, including the 67,500. Let's see something.
You get
199,500. Confirmed.
Yeah, 199,500.
Come on, man. This is 67,500, eh? Let's take our time. It will come soon and then we finish it. Now, please, when I go up, sum the liabilities too, and then let's see the equity and liabilities.
It's also 9,500.
So it has balanced?
Yes, sir.
Okay, if it has balanced, then I'll leave the balancing and then position it for you to take the screenshots. Yes, the one who is taking the screenshots, kindly help us. I think I positioned it well for you. Take the the P&L from the P&L, eh? We have to start from the P&L, right?
Yes, sir.
So let me bring it down. Don't worry, it will come. It will come. Please take this. Take this. Are you done?
Yes, sir.
Let me move up slightly. Yes, take the ending part. Take the ending part. Are you done?
Yes, sir.
So let me move to the statement of financial position. Take this part. Take this part. Are you done?
Yes, sir.
Let's try and get the last one, then we close. Yes, take this one. I think we are good to go.
You're done.
Okay. So in our next meeting, we will solve 2 more and close chapter on operation of another. We'll look at cash flow. Then we'll look at cash flow too. So by next week, we should have finished, by the coming week, we should have finished with everything on question 3. Then we'll discuss interpretation, 2 meetings, come back, and then we are finishing. So I think it's been a good day. Let us go and prepare and go to church.
So please, it's tomorrow for us.
I will check. I will notify you in the conference.